Fitness.
You're listening to an encore presentation of this program, KCAA, the Inland Talk Express.
Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. Pick up the phone and give us a call. I say that each and every show, and I want you to do it. And the reason why, and you don't have to do it right now, but when you hear that phone number and you've got a question about your mortgage, about wanting to get a mortgage, about the purchase of a house, about selling a house and buying another one, maybe an investment property, you're going to need professional advice. And that's what we try to provide at Malibu Funding. Malibu Funding is the source for the funding for the show. Thank you very much for those nice people. And we do broadcast out in the Inland Empire and in Northern California and in Nevada. KCAA, KMET, and K-Tahoe are all the stations that we're on. We're also on some FM signals in the Inland Empire. I listened to it the other day. I thought it sounded pretty good. I like that FM signal, you know. So if you're out there and you're listening, you're driving around right now and you're hearing the show, remember, you need a professional to talk about financing when you're trying to get a house or when you're trying to refinance a house. 888-713-2929, that's the telephone number. info@malibufunding.net, that's our email address. My Twitter handle is @Jeff6493. Funny story about 6493. We used to have a license plate in Massachusetts when I was a kid. That was 6493. And if you can think back to a time where anything in California had 4 numbers to it, even my PIN for my bank has now increased from 4 to 6 numbers. Chase has increased all their PIN numbers on any new cards that you get to 6 digits. I guess the 4-digit code, I guess they ran out of them for all the accounts and debit accounts and everything you have to do for your ATM. So 4 digits in anything is a long time ago. So the license plate gotten back in Massachusetts in the early 60s, or maybe it was even the late 50s, had 4 digits, and that's Jeff @6493 or @Jeff6493. That's my Twitter handle. We talk about some of the things on Twitter. By the way, there is a lot of chatter on Twitter about what's happening with the trade, not the trade imbalance, but the thing that Trump is doing in terms of tariffs with Chinese products and what they're retaliating with American products. It's affecting the economy and will continue to affect the economy. These things aren't important so much. Yes, they are, because when the economy is affected, it's going to affect both how much money you make and then obviously how much money you can afford in your mortgage. Some of the things in real estate, we're going to talk to Justin Landsman and Michelle Wild, 2 different lenders today. I want to ask them about what's going on in the supply and demand of housing and how that's affecting the mortgage industry and the supply of money. As everybody knows, what we're doing in refinances has really lessened, and the refi market has really dried up. And every month that we get away from low interest rates and the interest rates go up, we might see 2 more interest rate hikes this year. Every day and every month that we go by and those things happen, we see a shrinking in the mortgage refinances. Now, this is all at a macro level, unimportant to the poor person who needs to refinance their house because they have some medical bills they have to pay, or they want to really pay off their credit card debt, or they are just trying to work their credit score so that their interest rate is lower, so that their monthly payment is lower. But if you're looking at the macro, at the larger scheme of things that happen in the mortgage marketplace, you'll understand that it really affects you and your decisions that you've got to make based on what today's rates are. So we want to talk to Justin Landsman over at Velocity and Michelle Wild at Orion and just get their opinion as to where we're heading. Both of those companies do non-QM loans, and the non-QM loans that they're doing are a little bit higher in interest rates, but they're more expansive. Obviously, as everyone knows, they don't get sold to Fannie and Freddie and Ginnie. So if the government's not involved and private investment and private equity is involved, either hedge funds, sovereign funds, insurance funds, all kinds of different ways that mortgages are bought and sold on the secondary market beyond Ginnie, Fannie, and Freddie, we know that in those solutions, the opportunities for you out there are greater in terms of the different types of loans, bank statement loans. We've talked about it many times. I saw something today that talked about stated loans again. Well, the no income, no asset, the NINA loan, the no income, stated asset, the NISA loans. A lot of these loans are making their way back. Now, as a result of that, the amount of money that you need to have in the deal has increased. I want to talk about that in a later section, but up front, let's talk about the rates and where we are headed and what's happening right today. 30-year fixed rate. This is an average, of course, that we get each and every week from Matthew Graham. Matt's been on the program several times from Mortgage News Daily. The 30-year fixed rate in terms of the average is about 4.75%. The FHA VA is 4.5%. Now, usually there's a bigger spread in that, but when we get to where FHA and the conventional loans have very similar rates, we're talking about at the end of a particular cycle. Usually FHA VA, because they offer a lot lower rates, offsets the mortgage interest that you're going to have to include from your mortgage interest in terms of the MIP, mortgage insurance premiums. So if you add your mortgage insurance premiums on top of your rate, you usually get something very close to the 30-year fix. But in today's world, 3.5%. And if you go to some of the counties and states and federal programs that might give you down payment assistance, it may even be lesser than that, lower than that. There's a Home Ready program and a Home Possible program, both Fannie and Freddie programs, to be able to help you with your down payment and help you get into that property for even less money. But if it's in general a program whereby you're just getting the regular FHA or VA loan, and you're going to be paying a little bit more than your 30-year fixed rate if you add in, of course, the MIP, the mortgage insurance premium on top of that. The reason you're doing that is because you have less of a down payment. I get it and I understand it. The 15-year fixed at 4.25% and the 5-year ARMs 3.75 to 4.25%. Now, this says here in the article that it's depending on the lender, and that's true. It is depending on the lender. Each and every lender is going to come up with their own reasons why they do loans and how much money they need to make in order to make their business profitable in order to stay in business. Right now we have a scrambling in the industry because we just don't have enough loans in the purchase market to be able to satisfy the number of lenders that are out there. So if you see different programs and different rates from different lenders, it all is subject to how their business model works, whether it is. I know that some lenders require a margin beyond what you might get from another lender just because their overhead is high, or they need a profit margin to satisfy net worth requirements, or any number of other different reasons. A lot of states have put in place best loan possible legislation, which means that if you're in a state right now, let's pick one, North Carolina, for instance, and you as a loan officer don't offer that person the best possible deal out there in the marketplace, regardless of the business model, you're in violation of North Carolina law. Now, I know that that is, again, contrary to what it is in a lot of different states. That's why wherever you are listening to the show and however you listen to the show, make sure you understand a little bit about what the state requires of a lender, of a mortgage broker, of a bank, in terms of offering you rates, offering you fees. A lot of this stuff is regulated, a lot of it is not. So when you're looking to do a loan, let's say you're right here in California or San Bernardino, Riverside counties, hello everybody out there, and you're looking to do a loan, you want to make sure that the loan you're getting is the best possible rate in the best possible program. So in California, you are, as a consumer, you got to go out there and shop around. I would get at least 3 different quotes from 3 different people. And the reason for that is obvious. It may take you longer, by the way, and I know many people just don't have the time to shop. They've got kids in school, they're driving around a lot, they got very busy work schedules. But if you are out there and you need a mortgage, you really should shop around to get the best rate, the best program, and the best possible deal. I'm Jeff Barton, your voice in the mortgage industry. I really appreciate you all listening to the show each and every week, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. Pick up the phone and give us a call, and we'll talk to you about your mortgage. There are a lot of things that you need to know when you're trying to decide what to do, where to go, and who to talk to. As I said in a previous segment, you really should shop around a little bit. In California, if you want to get the best deal, you have to shop. It is not a regulated thing that you get the best rate and the best mortgage deal from each and every lender. So shopping is the only way by which you can get a real honest look at what different types of people, whether it's from a bank, a mortgage broker, or a mortgage banker. All of these things are really important to get you the best deal. I know it's time consuming, I know it's not simple, but if you want the best deal, this is my recommendation to you. And again, I want to say hi to everybody out in the Inland Empire, San Bernardino, and Riverside counties where the show is being broadcast every Saturday and Sunday. And again, thank you for listening, tuned into the show, driving around on a Saturday or a Sunday trying to figure out what you want to buy from Home Depot. Each and every week we bring to the show guests from different lenders, from different walks in the real estate world. This week is no exception. Michelle Wild, who I've known for a number of years now for Orion Mortgage, is with us. Michelle, how are you?
I'm fantastic. How are you? I'm
fantastic, too. I was talking in the earlier segment about what's happening in the mortgage world, that we have a bit of a dearth in terms of the amount of mortgages that we're doing. Refinances are really down. But your company is a little bit different, how you do business. You do a lot of non-QM. How are you helping fill the gap for people who need loans in a market that is a little bit more difficult to get a loan than it was maybe 2 or 3 years ago because of rising interest rates?
Well, there's a lot of different loan products out there right now for people who have a variety of different needs. I know it's definitely not as easy as it used to be. One of the things that Orion Lending does is we work very hard to make sure we try to get every customer approved if possible. It's not always possible, but if it's possible, we do. We do all of our regular agency stuff that a lot of other lenders do. The thing we do differently on those products is we don't have any what we call overlays. There's no extra rules that we put into place to make things tougher for borrowers on those regular FHA, VA, USDA, Freddie, and Fannie products.
Right.
But the thing that really stands out and is really unique in today's environment is the non-QM, like you mentioned.
Right.
So this stuff is products that are like for self-employed borrowers who cannot necessarily qualify on full documentation on their tax returns, but have good cash flow going through their bank statements. So we offer business bank statements and personal bank statements for qualifying purposes for people who are self-employed. You do have to be self-employed to get the product, but it's an amazing product for somebody who's self-employed. And they get to basically qualify based on the deposits versus what's on their tax return. So that helps out a lot of people who are in that position where they either file, some form of self-employment. The other, there's so many other really cool non-QM products that are available. There is an asset depletion product for people who have a lot of money but maybe don't qualify. Maybe somebody who's retired or something, and somebody in that position, or maybe somebody who's in between jobs, but they have a lot of money in retirement accounts and in the bank. There is an asset depletion loan that's available where we take your assets and divide it by 120 months, and we can use that in order to qualify as well. So there's lots of different little helpful products that can become available to people that people probably don't even know exist.
Right.
It's a very interesting product, and it's really helping a lot of people.
Now, we talk a lot on the show about Fannie Mae and Freddie Mac and try to tell the listeners that a lot of loans that are sold to the government agencies or the government GSEs, it's a different world when it comes to non-QM. And the availability of money is usually at the source of where the products come from. Your company, which has, I guess, been around for, how long have you guys been around?
Our division's been around a little over 3 years.
Okay, very good. So in terms of the availability of money, could you just describe a little bit about where the money comes from, how what you do with the loans afterwards, just so that people who are listening to the show understand that this isn't just something that'll be here today and gone tomorrow. You guys are pretty solid and been around a long time.
Oh, absolutely. And we have a parent company that's been around for a lot longer than we have. The non-QM product is all funded through Wall Street.
Right.
It's all funded and backed by Wall Street firms and investment companies. It's different, though. It's not something like you're going to, we all experienced during the last crash,
right,
where everything was kind of in a little different, situation. This is all Wall Street firms, and the people who are qualifying for these are putting money down. This isn't going to be 100% financing. So
right,
people who are doing a bank statement product may have to put 15 or 20% down, depending on their credit score, in order to qualify. So it's actually a very good investment for Wall Street because they're walking into somebody who's probably a pretty qualified borrower with a high FICO. It's just they're not able to do full doc. So for the Wall Street side of it, they're keeping it. They're buying the product from us after we close, and they're sending the mortgage will be paid through a servicing company. And so the servicing company may change, but the owner of the note will still be the Wall Street firm that originally invested in the buyers,
right,
when they got approved. So it's not something that's going to be here today and gone tomorrow. It's actually a very good investment. Unlike the prior to the crash where people were seeing 100% financing. That just doesn't happen right now in those types of borrowers. There is 100% financing available through down payment assistance and stuff like that,
right,
in combination with a regular government loan. But on these non-QMs, you're not going to see 100%. So it definitely, people shouldn't be worried or afraid that, oh my God, this is going to cause the next crash. These bank statement products are actually, they service and perform really well.
No, they do, and the default rate is really down on a lot of these products, more so than actually conventional loans, surprisingly enough.
Absolutely. I mean, and a lot of these people, like I said, a lot of them are self-employed borrowers who take advantage of the tax write-offs that are available through, the IRS tax code. And by doing that, fortunately, they're accurately filing their taxes, but really not putting themselves in a perfect position to go get a mortgage or to buy a house. And these people, they pay. Like you said, the delinquency rate is very low on.
Michelle, where do you think the market is heading? I mean, you're the VP there, and you have an overview, unlike a lot of account executives, that you see a macro of what's going on in the marketplace. Where do you see real estate prices and, I guess, tangentially, the mortgage rates? Where do you think we're heading in the next, because I've heard that there is talk of recession next year, as early as next year, because we're kind of at the end. Fannie Mae has predicted we're at the end of the expansion. So a lot of people might be nervous if they're reading the same information. So your expertise in, showing us where the market's heading would be greatly appreciated.
Well, this is what I see as far as nationwide is concerned. There's a lot of areas around the country that have had appreciation, but what you experience even in California, where they've had a more substantial rate of appreciation than other states,
right?
Even in California, the appreciation has happened at a slower pace. It wasn't like before the crash where we were having 50% per year appreciation.
Right.
It is at a slower rate, and I think because of that slower rate, in addition to the tax cuts that are going on, and people hear all the time, oh my gosh, I hear the Fed is going to increase the rate, but the rate that the Fed is increasing does not have a direct indication to what mortgage rates are going to be. Mortgage rates are based on the bond market,
right?
And it is sometimes correlating, but really it's completely separate. So I'm not as concerned about where rates are going, and the reality is when you look at the grand scheme of things, the rates are still very low in comparison to historical rates. I'm sure, Jeff, I'm sure, we're similar age. I'm sure when you first got a house, it was a little bit higher interest rate than we've seen in the past 5 years.
Yep.
So, in relation to historic figures, rates are still very low. Do I think that they're going to climb a little bit over the next year? Probably. So, if you're in a position where your interest rate is higher than the current market rate, I do recommend getting a refinance, but you only do it when it makes sense. And then as far as buying a house, I would highly recommend getting into the real estate market. Even if it's a slower appreciation, this isn't a get-rich-quick thing.
Right.
It's a get-rich-slow thing, and you will have appreciation over time. I don't think that our economy is in the place that it was before. People aren't doing crazy things like they were doing before.
Hey, Michelle, we're up against the clock here. You want to shout out your phone number for those who are listening to this terrific information? Maybe they want to get a hold of you directly.
Absolutely. My number is 602-663-6178.
Michelle Wild from Orion, thank you very much again for coming on the show. It's been a while. Thanks very much.
Absolutely. Have a great day.
And you do, too. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. If you pick up the phone and give us a call, we can help you with your mortgage. We can talk about the different programs available out there, and we can see if there is room for you to get a better deal than wherever you currently are trying to get your mortgage done. I always say shop around, see what 2 or 3 people think and say about both the rate, the program, the amount down. All of these things are important because here in California there is no law that requires that you get the best possible deal out there. Some states there are, but not here in California. So it's incumbent upon you, if you want the best deal, to shop around. Certainly we can help you do that, and if we can't, we steer you to people that can. This show is about information, about trying to help you decide what's best for you. So we bring people from all kinds of different companies, different lenders, people who are, just interested in trying to present the best possible case for you and your loan. One of these guys, been on the show, hasn't been on in a while. Justin Landsman from Velocity Mortgage is joining us now. Justin, how are you?
I'm doing well, Jeff. How are you today?
I'm great, man. Thanks very much, and thanks for coming back on the show. I know how busy you are.
Thank you for having me.
Okay, very good. Let us know a little bit about what Velocity does and how you're able to help people in situations that may not be cookie cutter.
Yeah, so we specialize in helping out investors, real estate investors with single-family properties, duplexes, triplexes, apartment buildings, offices, retail, warehouses. We just tend to stay away from primary residences. But people who have investment properties and that don't want to show personal income should definitely look into this program because we're helping a lot of these guys out and getting the deals done without a lot of the hassle that a typical bank would give them.
What is the approval process? I mean, obviously, when you're talking about investment properties versus primary residence, there's a difference. Can you explain what the approval process might be on your type of loan versus the residential loan?
Totally. First of all, on any of our deals, whether it's an investment residential property or a commercial property, we just want to understand that the borrower truly is an investor, that they have currently or have had in the past real estate that was an investment for them. We don't want to lend to a first-time investor, but once we get past that and we know that they own their primary or own other investment properties, we'll start looking into the property itself. We're really what I call an ABCD lender, an asset-based, credit-driven lender.
Okay.
So we're looking at the asset in the beginning, making sure that it's something we feel comfortable lending on, that there's nothing really wrong with it and there's no issues as far as title goes. And then we'll go ahead and just look at the borrower's credit and make sure that they're worthy and they're making payments on what they do have. When it comes to income, that's where we're saving a lot of people. There's a lot of self-employed people making a lot more in reality than they're reporting on their tax returns. And those are the guys that love this program. They might own 5, 6, 7, 10 properties banks are asking for financials on all of those properties and on their business and themselves. They want to see their personal income statements. We're not looking at any of that. We're literally just looking at the property that we're doing the loan on and then their credit. We're just making sure they're making their payments.
Now, when you get past these two, I guess, hurdles, which really aren't, I mean, obviously you're looking at a little bit more down payment. Is that right?
Yeah, I mean, we just want to understand exactly what the borrower's looking for, and if we're a fit, we're going to find that out pretty quickly. And what it comes down to is, what's the borrower coming to us for? Why do they need this loan? Did a bank turn them down? Why did the bank turn them down? Is it because their credit was low? Sometimes that's a good reason to come to us, but most of the time it's because they just don't want to go through showing income documentation, or their income documentation really doesn't qualify. That's the reason that Velocity is here today.
Now, where do you do loans? Is it just here in California, or are you nationwide?
We lend nationwide. There's only about 4 or 5 states right now that we do not lend in, but we do in most states.
And obviously, since I've known you, the business has grown quite a bit, right?
Absolutely. Over the past, we've known each other for about 5 years, and I would say business has more than quadrupled in that time in the non-QM space, where we fit, and it's expanding like crazy. It's projected to grow to $20 billion in loans in the non-QM space by 2020. Okay. $20 billion by 2020. That's a number that was given by some really good researchers in the real estate lending field, and that's just proof right now. If we did, I think the number I read last week was $7 billion in 2017.
Oh yeah,
that's a huge number. So.
Yeah, it's a huge number, and this is per month, yes, or per year?
No, per year.
Right.
And that's nationwide, and that's only on information that was available through public records.
Well, it's a big market, and the way I read it is that obviously if it's more difficult or it's just impossible to get a loan in certain circumstances from the regular channels, either Fannie, Freddie, or a Ginnie Mae loan, the non-QM space, now we call it non-QM, but a lot of people liken it to what was happening in 2008 with subprime. It's not that, right? Because you have more money into the deal and the credit scores are better.
Great question. So a lot of people get the two mixed up.
Right.
Back in 2008, that bubble was strictly due to banks lending people money who couldn't afford the payments on their primary residences.
Right.
We're dealing with sophisticated real estate investors. That's the only reason we feel that this product is going to take off, and it has. If you look at our default ratio compared to typical batches of primary residence loans, even though those rates are much lower, people were getting rates in the 3s and 4s over the past few years, the default rate is still higher on those programs than for ours, and it's because we deal with investors, people who know what they're doing. That's why they have these properties usually.
Right. Oh, and do you see, over at Velocity, do you see the appreciation continuing? There is some concern that we're at the peak right now.
Yeah, there's some concern. I always just leave that question open-ended. I'm not the go-to guy on that. I don't really go to anyone. That's all dictated by the markets, supply and demand. One thing I do like to say is you just got to keep an eye on supply and demand all the time, because just in the last few months alone, I've seen supply skyrocket.
Right.
The funny thing is rates are about steady. They're going up very slowly, and usually they're correlated. In this case, it's not. So that's a good indicator of, hey, maybe people shouldn't always be guessing at this. They should be prepared for whatever the market does to take on that payment.
Well, as you said, if you're dealing with investors, this is what investors look at, which is why I asked you the question, because I know that you're nose to the grindstone and also ear to the ground, figuring out exactly where the market is, because that's where you obviously do your loans.
Yep, and when lenders see something like that happening, they tend to start pulling back on LTVs.
Right.
Our company has not pulled back on LTVs at all. That's a good indicator for our confidence on the markets today. It might change in the near future. I've seen other banks do it, but right now we still feel that it's strong. I mean, look at the stock market right now. It's
booming.
skyrocketing.
Yeah, no, it's booming. And in looking at the 10-year Treasury notes, which is what bond everything is related to when it comes to mortgage rates, it's kind of stuck at 3%. And usually, if that's the way it is, they slap on whatever on top of that, and that's what your mortgage rate is. Currently, it's at what, 4.5%.
Exactly. And talking about single-family residences, which we do lend on,
right.
We actually just rolled out 2 new programs in the past year. We rolled out a quick fix program, which we don't even require an appraisal on. That program is just getting a BPO, and it'll shoot through the system in 7 to 10 days till funding. And our ARV program, which is a program that we're going to go off of the after-repair value.
Right.
That's at 75% LTV. Those are both what we would consider interest-only loans, 1 year, and that just gets you in the position if your property isn't really performing or isn't occupied but needs work,
right,
to go into our 30-year loan. But we wouldn't allow those types of properties to go into our 30-year loans because they're not performing yet. But that gives you a year to get them performing. There's no prepayment penalty. It's great, just stepping stone to get there without having to go all over the place.
Justin, shout out your phone number for people. We're up against the clock here. Thanks very much.
Absolutely. 818-338-9539. You're an investor and you need advice on finding financing for an investment property, give me a call.
Thank you very much. This has been Justin Landsman from Velocity Mortgage. Really appreciate it, Justin. Thanks for coming on the show.
Thanks for having me, Jeff. You have a great day.
You too, man. Thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. We talk mortgages. We talk solving problems. We try to, bring some experience that we have a lot of it, tons of it, as a matter of fact, done thousands and thousands of real estate loans, as well as sold many, many properties over the 20-plus years that I've been in the business, and we try to bring to the show many guests who have different perspectives on problem solving and the way things are and how you can work on basic problems. With us today is a terrific guest. We've had her on the show once before. She was a former champion on the LPGA and has worked in nonprofits, as well as her latest ventures, which include a new book as well as a center for leadership development with women. Her name is Deb Richard. Deb, how are you?
I'm doing great, Jeff. Thank you. How are you today?
You know what? I'm okay. I've had better days, but talking to you is always fun because not only are you all those things I just mentioned, but you're a great running partner, so I always appreciate having you on.
There's nothing better than a run on the trails with you, Jeff.
You know what? And I'm going to miss that, too, if you get this new venture of yours up and running, and sooner rather than later. Can you give us a little explanation as to the leadership development program you're involved with?
Absolutely. One of the things, and golf is such a great platform for learning about yourself and learning a lot of disciplines that translate so well into everyday business life, and especially excellence at the executive level. And one of the foundations of that for me is trust. And if you can build trusting relationships, you have the opportunity to do good work. And so I work with executive leaders. I'm working with women, in fact, and leadership teams. And we're working on how do you build that trust in a team? How do you stay present in the way that you deal with the everyday functions of your job and the people that you're working with every day? How do you let go in ways that allow the people around you to bring their best selves to the effort? Because the more people you have operating at their best levels, obviously, the better the work product will be. So those are some of the concepts that we're working on. That's just the opening salvo.
Right.
But we have a lot of deeper levels that we go into, and more than anything, Jeff, I think you and I have talked about this when we've been out on the trails running, that my fundamental belief and what guides me is that everybody has a gift to give to the world. And when someone is offering you that opportunity to share in that gift, run with it, because you never know where it will lead you. And if you stay open to those experiences and those opportunities, life will take you in fascinating directions and truly can define your life in ways you never expected.
You know, that you say that, there are several questions that pop in my head. The first one is, in dealing with the people you deal with, do you find that there's resistance at all in what you're trying to say, or is it all something that people, you're basically singing to the choirs? Because to me, it makes 100% sense what you're trying to say, but I always, in a corporate atmosphere, I always encounter some resistance. Basically, it's, oh no, that's not the way I'm doing it, or, you know, how do you see that?
I'm enjoying the people I'm with because I feel like I'm in a group of sponges, and they're just absorbing every ounce of it, and they agree with it.
Mm-hmm.
See it. And at some levels, they are exercising it, and at other levels, they're recognizing they need to work better at it. And it comes in different packages for different people. So I would say I'm more on the side of everybody is agreeing with the message. They recognize the message. They see areas where, you know, they are applying it. They see areas where they can work on it, and we talk about ways for them to exercise it in deeper ways.
Now, you say that you're using the vehicle of golf to be able to, I guess, deliver the message in a more, I guess, relaxed or a concrete way, and you have a center that you're trying to establish?
You know, it's all based around, one of the concepts that we're doing right now is we bring C-suite level women together, and it has two parts of every experience, and we're delivering it in a series. We spend the first hour and a half doing golf lessons, and based in those golf lessons are actual leadership principles and how to lead in your authenticity, and different principles like I'm talking about with being present and letting go, and and what is a power play? What does that look like? And then the second half, which is an hour and a half, we spend, and I go into an executive coaching session with the group. And one of the things that makes golf such a unique platform is that opportunity to be in a mixed group. And because you're there for an extended period of time, it's allowing you to build a relationship that there's vulnerability involved because you're learning something new and not everybody's good at it. And it gives you a reason to have conversations outside of just the golf itself. So as you learn more about the individual pursuits of somebody, whether it's their family, their kids, etc., it gives you more context to build a relationship off of. So as they have time to do that while they're learning in the golf environment, and then we switch to the executive coaching, because they've already gone through that vulnerability stage, they feel safe in the executive coaching session to share things with the group that are difficult to share. And it provides an impetus to their own learning and growth.
You have a project also that you're working on. You're kind of busy as I'm describing all this stuff. So you're also in the midst of finishing up or writing another draft of a book which incorporates a lot of your own personal story as well as your, you know, vision for what you want to do in the future. Tell us a little about that too.
The book is Trust. It's a fundamental piece of my journey where I have had trusting relationships that have accelerated my growth and propelled me into pursuing things in ways I might not have otherwise pursued, and ultimately set me up for great success. And then I've also had relationships where trust broke down.
Right.
And it didn't exist, and they were very destructive, and they took me off my game, and they really derailed me. And what was the process used to get things back in alignment and getting me back on place? So the book is obviously, I have more good stories than bad stories. I hope everybody's life is that way. They can experience more on the positive side. But it is a series of stories of human growth and trusting people and giving them the benefit of the doubt until they give you a reason not to. And
well, that's a very optimistic view of the world. I know people that would do just the opposite.
And I do too. And I think that's why I want to write the book, especially at this time that we're in, where there's so much negativism and there's so many negative messages that are, and vindictive messages that are very personalized messages. And I find that so heartbreaking because I do want to believe the best in humanity. And I think we need some positive messaging out there in the general populace, because this is what can be. When you give it a chance, this is what can be. And hopefully there'll be nuggets in there for people to grab hold of, because the stories are not so far removed from everyone else's daily life that they can't relate.
Do you have a way by which somebody who's listening to the show, who's in a position, they're an executive or they head up a group or they're with a group, that might want to get in touch with you about the leadership programs and what you're talking about?
Yeah, absolutely. Anybody's welcome to email me, and I will give you the do you want me to give it to you right now? I will, or I'll give it to you offline. Yeah,
you can give it to me now. Sure. Shout it out for the listening audience.
Well, there you go. So it is drcswe@gmail.com. DRESWE@gmail.com. DRC.
DRC. Okay. DRC.
So it's actually Deborah Shard Consulting, DRC, SWE, and gmail.com. And anybody who wants to shoot me a note, more than happy to enter a dialogue with you, and happy to take on any question you have.
Deb, thanks very much for coming on the show. I so enjoyed talking to you, and I definitely want to get together with you soon, have a cup of coffee, and just spend a couple hours just shooting the breeze.
I look forward to it, Jeff.
Me too. Thanks very much. This has been Deborah Shard, and I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry, and welcome back to the show. KCAA, KMET, and K-Tahoe, great affiliates around our state. We listen, and we love having them because we get the message out to you in a nice, easy, compact, drive around for an hour on a Saturday or Sunday way. So if you're out there right now and doing exactly that, thanks for listening to the show, and again, we bring some information to you about mortgages, whether it's about the rates or whether it's about programs or whether it's just about the availability of product out there. That's what we try to do each and every week. We talked to several guests today about all kinds of things that have to do with either real estate or how you can approach things in life. A lot of times, the way you approach things is really the way you feel about yourself, and how you feel about yourself each and every day is a great component towards happiness. Now, whether happiness has anything to do with mortgages, I don't know, but I believe that if you are a little bit more happy, you're probably going to be a better talker to people who are trying to help you. A lot of times I get caught up in the me instead of the person on the other end, whether it's customer service, whether it's somebody trying to help me do something, and I just get irritated because I have to do something, like I have to wait online or answer all their questions or just stand in line. I just don't like that. I don't think anybody does. But if I just take for a second and think about the person on the other end or of the phone or in the line and say, hey, you know what? They're just people here trying to help me, and take the attitude that, yeah, I'll just be patient and be a little bit more upbeat about it, I get a lot further along. And it's certainly that way when it comes to dealing with mortgage people. Anybody who's talked to the people at the bank or talked to the people online or the mortgage servicing company about their mortgage knows that if you're just a little bit patient, a little bit more happy, let's say, you're going to go a long way to getting your problem solved or whatever your question that you need answered. Okay, a couple things. Mortgage fraud risks rise, especially income fraud. We talked about this several times on the show, and I want to tell you just up front, got a letter today from a investor, somebody that we sell our mortgages to, that said, you know what, we have some fraud on a loan, and this has to the heart of what we've got on tap for you in terms of fraud rising, and what your lender does or what your broker does when there is fraud. There's three different ways that they can solve the issue. Most of it is about trying to refinance that person into a proper loan or getting someone on that mortgage application that can qualify for the income. So I want to go to, let's see, the risk of mortgage fraud jumped by 12.4% on an annual basis in the second quarter. Now, that sounds like 12.4% are defaulting. No, it's just that's the increase. So we've got 0.92%, or 1 out of every 109 mortgages received, mortgage applications received, has some kind of irregularity on it. I wouldn't call it fraud, but something that isn't going to let pass by the underwriter or the people in the QC department. So 1 in 109. Which is really pretty low when you consider it. I mean, it's less than 1%, right? It's 0.92% of loans. And that's right in line with what the default rate is, which is historically low. Usually we end up 3% of loans, that's 3 out of 100, are in default, which is, again, relatively low. So I want to talk about what are the 5 major problems when it comes to mortgage fraud. And you're out there right now and you're thinking, mortgage fraud, I didn't even know that was a problem. Well, it is a problem. It's a big problem, especially when it comes to income and employment. These are the top 2. Income fraud, misrepresentation of the existence, continuance, source, and amount of income used to qualify. That is the problem by which a lot of people, they say, you know what, I'll just say I make this amount. Well, that's fraud. So if you do make this amount and you're not a W-2 employee, how do you prove income? We talked with Justin, who was from Velocity Mortgage, who talked about what they use for income verification, income documentation. So if you're out there and you're considering a loan and you are a non-traditional W-2 borrower, look at the bank statements each and every month and the money going into either your personal or either into your business accounts, and that's the amount of money a non-QM lender like Justin or Michelle over at Orion will use to qualify you as a borrower. The other 4 are occupancy fraud, meaning you're saying, I'm an owner-occupied, when really you're going to rent it out. The reason you say owner-occupied is because you get a lower rate and it costs you less per monthly. That's fraud. If you are a transaction fraud, means the misrepresentation of the nature of the transaction, such as an undisclosed agreement between parties. Let's say you're buying a house for $100,000, yet the seller is about ready to give you $5,000 or $10,000 back, but you want to borrow the full amount of the loan, so that's a misrepresentation of the deal. There are other misrepresentations. You're buying from a family member and you don't really tell the lender. That's misrepresentation. Another one is property fraud, the intentional misrepresenting information about the property or its value. We got into this a lot during the last recession, whereby properties were being bought and sold from one family member to the next or one friend to the next, and what was happening really is that the property values kept being inflated. They kept taking money out of the property by buying and selling every 3 to 6 months, and that, of course, is misrepresenting the value of the property just because you're asking for more money, and because at that time we had property values increase so rapidly. Yeah, that's misrepresentation. Last one here, of course, is undisclosed real estate debt, i.e. you own a couple of properties, but you bought them with a seller carryback, or you bought them through some silent loans that aren't recorded. That's misrepresenting your debt. Therefore, your debt to income ratios are different. If you disclosed the actual debt to income ratios, you would not be able to qualify. That's a problem. Okay, Darrell, I want to bring you in for the last few minutes. 10 best places to live in America survey came out, and some of these places are kind of interesting in terms of where they would be. So I know I'm throwing this at you. 10 best places to live in America.
I've been to 45 states and probably 6 or 7 countries, and Southern California is still number 1 for me. Southern California, number 7 on the list is Dublin, California. Do you know where that is? I have no idea. No idea. I know where all the Irish went, I guess. Exactly. I know where Dublin, Ireland is, but not Dublin, California. Haven't heard of it. Dublin, California is number 7 on the list.
Let's see. Can you think of anything else in America? Another city. All these cities I never even heard of. Like, for instance, Carmel, Indiana.
There's bill collectors there.
It's the bill collection capital of America.
Yeah.
So it's if you're in that,
Yeah,
I have no
idea. A lot
idea.
of jobs for people that are real jerks.
You know, Indiana, it's one of those places I think of Mike Pence. Now, I'm not a Mike Pence fan. I know a lot of people are.
Or the Jackson 5.
Oh, you think that's where they're from?
That's where they're from.
They're from Carmel, Indiana.
Not necessarily Carmel,
But they're from Indiana.
Yeah.
Anyway, Carmel, Indiana is on this list. How about another one from, Sammamish, Washington.
Washington State has some beautiful places.
Beautiful places.
Vancouver is very nice.
I really like Washington State. I have a son, as you know, that's up there. It's really nice. It's big. It's open. It's beautiful. I love Washington State. I think some of the least underappreciated, and by the way, some of the most, the rise in the value of home properties really took place in Washington. I don't know about this area, but it looks to be up on the Puget Sound, which is, again, beautiful area.
The Port Angeles and Seattle, West Seattle, very, very pretty.
Now, there's Colorado is another state where I think a lot of people go when they're looking for a lot of land, but they still want to be close enough to civilization where they're easy drive into Denver. This place, Highlands Ranch, Colorado.
That's probably suburbs of Denver somewhere.
Probably close to that. Anybody out there who knows these places, please give us a call. Obviously, I'm giving this list up because I think if you're looking to retire, this is a great list for you. A couple other places, Ashburn, Virginia, Franklin, Tennessee.
Tennessee's popular these days.
Well, Nashville certainly is. And it's one of these places.
It's cool.
My wife's a composer. I really want to get down there just because I think, strolling around a town that it's primarily known for
music.
Music, right.
And it's not that bad of a drive to Memphis either. Memphis is kind of cool.
Yeah.
A lot of history in Memphis.
A lot of history in Memphis. Yep, exactly right. A couple other last ones on the list. Frisco, Texas. I don't know where Frisco, Texas is, but it looks to be in the northwest, almost on the border of Oklahoma. If you're out there and you're in Frisco, Texas, one of the states that Malibu funding is in, hello.
Part of the panhandle.
Absolutely. Thanks, Daryl, very much for jumping in.
Pleasure.
I appreciate everybody listening to the show. Once again this week, I'm Jeff Barton, your voice in the mortgage industry. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.